Well, hi, everybody. Happy Thursday to you. Thank you for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Well, being that it's Thursday, that means we have weekly export sales to talk about. They did come out this morning, and let's kind of walk through them and see what we had. And then we want to get some comments from Brian Hoops of Midwest Market Solutions. So let's take a look at the export sales numbers as they are as of this morning. First, we'll start with a look at the corn. Well, we knew it would be a big number because we had a couple of big sales to Mexico here recently. If you recall, it was like, about a week and a half ago, we had that one sale of like 1.8 million tons to Mexico in one day. Well, that added into the total here. And so overall, we had a grand total this time of 2.43 million tons. So yeah, it was a big number. We knew it would be, and it was. So now what? Soybeans, we had 808,500 tons. We have soy meal at 371,500 tons. Soy oil, 800 tons. And the wheat, 273,100 tons. Now, if we flip the page, we also have numbers for grain sorghum and cotton and rice this morning. So here's a look at what we had for that. Grain sorghum, 239,600 tons. And we had upland cotton at 242,200 running bales. My goodness, that was a big number. And then on rice, 53,100 tons this time around. Now, we'll get to the beef and the pork numbers in our next segment. But let's bring in Brian Hoops and talk about these numbers. What did you think of them overall this morning, Brian?
Hey, well, good morning, Marlon. So we expected very big corn sales, and that's exactly what we saw. Mexico was a massive buyer in the last week of corn. So about 71 million bushels was our weekly total for this marketing season. And Mexico bought about 45% of that total. So our overall corn sales pace remains slow compared to year-ago levels, well below what the USDA is forecasting. With one caveat that Mexico has been a massive buyer of corn this year. Their sales are actually running about 41% larger than last year and about 20% or so better than 2021. So Mexico's really, came to the forefront and bought a lot of U.S. corn. Without them, our export sales would be absolutely dreadful because China's largely remained absent from buying any U.S. corn. And we saw big sales for the 24-25 marketing season, 24 million bushels this week alone, and all of that was Mexico. So corn sales were good. We knew they would be good. They'll probably be okay next week. We need to be averaging about 30 million bushels each week to hit the USDA forecast. So we're more than double that this week. Soybean sales were also very strong. They were in that 30 million bushel range. China was the featured buyer there, buying, about 24 million bushels of the 29.5 million that we sold this last week. And we need to be about 22 million to hit the USDA forecast. So corn soybean sales are pretty decent. The wheat sales are dreadful, remain dreadful. 10 million bushels this week. That is the lowest in 10 weeks. Our export sales pace on an annualized basis, the lowest in 40 years, and it doesn't look like it's going to improve much anytime soon. We did see a private sale this week to China. Market kind of reacted one day and then has shrugged it off since that time frame. The only good thing you can say about these wheat sales is we need to be averaging just a little over 8 million bushels each week to hit the poor USDA forecast, and we're right there at 10 million this week.
The poor forecast. I like the way you worded that.
40-year low forecast.
That's a very realistic statement anyway for this year. Okay, I want to take a look at how we traded overnight. And even with these export sales numbers, it seems like there is an overarching weakness in the market here. You have December corn down 1 3/4. We're at 484 1/4 overnight, and March was down 1 3/4. By the way, that ended up only 1 3/4 lower after it had a couple of pennies of a rally in the last half hour of trade last night. Now in soybeans, you have the November contract 7 1/4 lower this morning at 1265 3/4. So the weakness is really continuing there. And, we took out some support here last week. And this is really starting to look a little dangerous on the chart, isn't it, Brian?
Yeah, it is. The markets bounced off of technical support and tried to rally, and now we're kind of starting to push back towards that technical support for soybeans, and corn could be following the similar pace. Wheat is sitting down near its contract lows that we seem to make each and every week, so we're finding more selling, and that pressure just kind of keeps building on itself until at some point it doesn't. You stop making new lows and you start to see some fun short covering to give us a bounce. But yeah, we're just not primed to see any type of a technical breakout to the upside, I'm afraid, until we start breaking some of this, this overhead resistance, and we haven't been able to do that in any of these markets. So it's probably going to continue to be a struggle in here. In fact, going into next week's supply and demand report, there's a lot of talk that we could see an increase in corn yields and possibly soybeans as well, and that is probably going to keep some pressure against corn and soybeans going into that report.
I'm glad you mentioned that, and I guess the key takeaway is that there will be a report, right? They're actually going to have it this time and not have to get it preempted. Okay, on the wheat, we just had it up on the screen here a second ago. We were just fractionally higher, up 0.75 cents on that nearby December. That's in Chicago. Kansas City gained 3 3/4 overnight, and in the spring wheat market, you had December 3 higher there at 7.14 3/4. For those of you growing cotton, we had December finishing last night 13 points lower. It's at 86.88 this morning. We'll be back in a moment. We had some beef and pork export numbers to talk about, and we'll do that next. Well, we're back with you, and we are looking at our export sales this morning with a little help from Mr. Brian Hoops. Now, I mentioned that, of course, we had the grain numbers. Now let's look at the meat export sales last week. How did they fare? Well, let's look at the beef export sales. We had 13,600 tons overall. Now, that's combining this calendar year and next year together. The 2023 portion of that was actually down 25% from what we had the previous week, so slid a little bit there. On the pork side, 42,900 tons. Now that was a hefty number, and that even includes reductions of 100 tons for next year, for 2024 from Japan, but still, basically about 43,000 tons. That was 57% higher than a week ago. Brian, they're going opposite directions here.
Yeah, that's correct, Marlon. And we talked in the grain segment about Mexico and China, the two countries we mentioned, and they are the biggest buyers of U.S. pork this week. Big sales to those two countries and pretty minimal sales to the rest of the world. But it was a very strong week for exports of pork. And I guess if you looked at the charts and you saw, we're near contract lows, you would think that this would be a good time if you wanted to buy some products pretty cheap. This is a good time to do that. Pork is sitting at these lower levels. And if you look at a cattle chart, opposite is true. We're up near contract highs. We're probably going to see a slowdown in demand. We've certainly seen that. We're also seeing a little bit lower cash trade in the country. And we really haven't seen much in the way of a slowdown in kills yet. Last week's Friday, Saturday kill was very slow and pulled our weekly average down. I would look for the same thing this week because those box beef values, they're not being propped up. They were down again yesterday. And really the only thing that's going to prop them up is if we start cutting our kills. And I think that's probably what we're going to see is maybe around a 600,000 head kill week when it's all said and done for this week.
Let's review how we finished yesterday, and let's look at live cattle here first. On our futures trade, October was 7 cents higher yesterday, that's all. It finished at 182.20. December live cattle were 37 higher at 186.02, but at least they were on the plus side, I guess, from the producer's standpoint. If you look at the feeder cattle trade, well, yesterday it was a mixed affair with the October down 82. November, though, was 7 higher. It closed at 250.42, but keep in mind that was off of its high of the day by $1.90 yesterday. So caution flags were out on that one. And then on the lean hog trade, you had October down a nickel, but December was up, a whole dime at 69.17. Man, that was exciting on the finish. It finished, about 75, 80 cents off of its earlier high of the day. So a mixed affair there. We'll see what they want to do this morning. But Brian, thank you a lot for taking time to talk with us this morning. Covered a lot of ground. I appreciate that. Brian Hoops, Midwest Market Solutions. He is in Springfield, Missouri.